Good afternoon and welcome to the Boring Millionaire podcast. My name is James Lamantia and my mission is to not only make you money with the stock market, but to teach you how to use the stock market to confidently make that money all on your own. So today is Saturday, it's May 17th, and what a killer week we had in the stock market. It was green all around except in Boston because go Knicks, first semifinals since 2000. Very excited about that. If you couldn't tell that I'm a Knicks fan. But we're here to talk about stocks, so let's get right into it. This week we saw the S&P 500 up 5.25%. So to see that on the S&P in 1 week is absolutely killer. Not to mention we're just compounding on top of the previous weeks that we've seen in the stock market. So we're just absolutely killing it as far as momentum and positivity and good aura all around the market. So Monday we started the rally 3.25% up all in one day on Monday's afternoon trading. The reason we saw it up so strongly was because over the weekend, China and the U.S. had come to terms on these tariff deals. So no more worries about a trade war. We finally figured out what we need to do, and they've come to terms, and we are moving forward outside of these tariffs that we thought we were going to get hit with a month ago. So absolutely stellar good news for the market. That kind of ignited the rally that we saw this week. Tuesday, it followed through into another positive day. Wednesday, we kind of took a breather, cooled down a little bit. But then Thursday and Friday, we saw it pick back up and continue into the end of the week where we closed 59.58 on the S&P 500 and 19,211 on the NASDAQ index. And the reason I'm bringing those up is because months ago during the podcast, every episode I would say what the indexes had closed at for that week. I wasn't doing that for the past couple weeks just because we had a primary focus on the S&P 500, looking at what direction it was going in, a lot of market moving news. So now I'm getting back into the habit of saying where we closed every week. But it's important to know that we closed at 59.58. I'll just focus on the S&P 500 because the all-time high is 61.47 on the S&P 500. So we're less than 4% away back to our all-time highs. So yeah, a month ago, you were tuning in and hearing about a market collapse, great discounts, stocks are bleeding everywhere, but now we're back in regular territory. We're right near the all-time highs. We're in a regular trading pattern. We're in a regular range, and we're seeing the levels that we saw between December, January, and February. The all-time high being on February 19th. So we are right there, and I believe we're going to break right through. I think there's going to be turbulence on the way up. You know, nobody's going to just be anxiously pulling the trigger to buy stocks at all-time highs. But I do think we're inevitably going to push through into higher highs. One thing that's further telling me that we're going to see that is the volatility index had continued to drop through this entire week. Just a reminder, the volatility index is the fear and animosity in the market, and we fell from 21.9 is where we ended last week. We are now at 17.15. So a dramatic drop, and under 20 is a key factor in what we look for on the VIX. The next indicator I'm looking for is actually 15. So 15 is the level it was at when we were at the all-time highs. So for the market to calm down to that same realm of calmness is just going to be another positive indicator that I'm looking at in the stock market. Another thing telling me that we're going to continue this rally higher is that we blew right past the one-year average. So last week I said that was a key metric to keep an eye on. And we didn't fight it. We didn't see any struggle getting through it. That Monday trading just flew right through it. So Monday we cleared it, and then all week since we continued to go higher, it is obviously stated that we did not fall above it or even tap it. We just blew right through it. So an ultimately positive signal for the market as a whole. Now, this coming week, I would not be totally surprised if we saw the market kind of just take a breather, and the lowest I think we would hit is 57.59, which is what the S&P 500's one-year average is. So kind of have to play both sides of it. Not to quote Always Sunny in Philadelphia, but if you're playing for both sides, you'll always end up on top. And that is a true phrase in the stock market. We can't today just decide it is going to go higher or no, it's going to cool down and hit the one-year average. So be prepared for both. If we see a cool down, I do expect that to be the lowest we go, 57.59. However, if we continue to rally higher, that's not going to be a bad thing for anybody. So all around good shape. All these same indicators that have been surrounding the market for the past 2 months still reign true. Inflation is still cooling. Jobs are being added. The Fed is still on their plan to cutting rates through 2025. So everything is pointing to positive signals in the market, and it's showing us because the market just continues to rally. So wonderful, wonderful atmosphere that we're in. And just again, to go over a full timeline of events, February 19th was the all-time high. We fell in March through February into March into the first level of discount. Then in April, we saw the tariff news bring us all the way sharply down. April 9th was the historic day when that news reversed the market. And now it's May 17th. So in 3 months, we went from all-time highs to crazy lows back to just under all-time highs. So always buy the dip. Always buy the dip and buy the discount. That's where the money is truly made. It's always possible and opportune to make money in the stock market in all trading ranges, in all atmospheres. However, straight up market drops, overall market drops are where the true bread and butter is. So moving on, what I do want to say is one thing we saw out of the China news on Monday is there were some particular stocks that benefited better than others because of that news. One is NVIDIA. They were up 16% for this whole week. Tesla was up 17.5% for this whole week. We have 3M up 7.5% this week. We did have that as one of our $50 picks in last week's episode. So in 1 week, we are outperforming the S&P 500. Granted, it was on the back of news that propelled it that way. And we also had Caterpillar, a direct beneficiary of this China tariff news. They were up 8.5% this week, but would also like to just shine light. We bought it about a month ago on the podcast, and it is up 20.5% since then. So again, buying discounts, buying dips. There was bad PR, bad news surrounding these stocks. And then once they overcame that news, they're benefiting better than the average in the market. So absolutely great picks. I would even still be a buyer of those stocks. They're never going to go anywhere. They're fundamental in the world that we live in. And I believe they're still going to continue from this good news surrounding the China tariffs. Another stock news I want to put on everybody's radar is the news surrounding United HealthCare this past week. So I'm sure everybody knows and remembers the news in December of 24, the original CEO, Brian Thompson, was assassinated. A new CEO had taken his place since then. But then in this quarter's earnings report, they withheld forecast, which was, quite frankly, a little odd for a public company. One, as a household name as United HealthCare is, strange that they didn't offer any forecast. So we saw the stock fall basically from 600 to 400 on that news. Kind of fussed around and continued to bleed out for a couple weeks. And then we saw this week news came out that the Department of Justice is doing a probe into the company to see if they were committing fraud at any point. So I'm a big believer that even if there is a true case of fraud within this company, it's not United HealthCare that's committing the fraud. It's several key officers, individuals who are doing that within the company. So where I'm getting to is that news sent the stock all the way down to around 248, I believe was the lowest. But within 2 days of trading, it had rallied back up to 284. Still 284 off of 600, more than halfway down. But United HealthCare is still United HealthCare. Nothing has changed about the company. It's just a massive amount of bad news surrounding it coming from all different directions. So I will elaborate more when I get into my $50 list. But the reason I'm bringing up United HealthCare and these China trades is because now that we are back up at just about all-time highs, we need to have more intricate and more particular stock buying be conducted to make more money in the stock market. Yes, all the same blue chip valuable stocks I believe are worthwhile in this positive market atmosphere that we're in, but everything isn't discounted at this time anymore. The dip is over. It's not just across the board that all stocks are great opportunities. So we need to just be a little more particular, do a little more homework in what we're looking for when we purchase these stocks. So the reason I brought up United HealthCare, it is one of my $50 this week, but all the bad news is in. I've mentioned before, buying on bad news is a key way of making money on stocks. And then even with the China trade, I don't want to use the word gamble, but a month ago, we took a risk on some of these stocks, anticipating they would beat the tariff news. And then when it came to news that they did beat this tariff stuff, I shouldn't say the stocks beat the tariffs, but the news sorted itself out in a manner that benefited these stocks. And we saw that the prior risk benefited us because they are beneficiaries from that news. So just different angles of playing the market. I am also a huge believer in the 3-month, 6-month, and 1-year average. So again, just encompassing everything going into what we need to look for when buying stocks now in a rally mode, a positive atmosphere. We're slightly off record highs. We're not 20% off record highs. So these are the kinds of strategies and mentalities we need to have when looking for the next stocks to buy. So going into my $50 list, I always like to just say I make it a $50 list because you can really tackle the stock market with any budget. Let's just reduce it today. So we're going to go with a $25 list. I'm sure you could manage tucking away $25 every week, even if it's every other week, and taking that $25 and investing in yourself and in a better financial future for yourself. So take that $25, break it up evenly into $5 increments, and then with that first $5, I'm going to buy Apple. So it found the floor on its 3-month average. All week, it's basically been tapping it, not going below it, hanging on to those levels, and for that reason, I am buying the stock. Apple is a killer stock. They are proprietary in the world that we live in, and the charts are telling me now is a good time to pick it up while we're paused in this rally potentially, or if we continue to run. Either way, this stock is paused in its rally, shown through the charts. My next pick would be Lululemon. So again, going into the nerdy chart stuff, it is hanging on to its 1-year average. Over the course of this past year, it is double bottomed. So it hit a low, rallied up, and then hit that same low without breaking below it. Huge positive sign when looking at stocks to buy or the market as a whole. So those trading analytics are telling me to buy Lululemon. And another reason I would be interested in buying Lululemon is they are apparel. They're one of the leaders in apparel. And with that said, we're going into the summer months, and I do feel that people are more interested in the way they look during the summer months. So I would never buy a stock simply because I think people are going to care about how they look. But I do believe it's a touch of sentiment that's going to be there through this summer, and Lululemon could be a beneficiary of that. My next pick is Reddit. So Reddit is hanging on very strongly to its 3-month average. And another thing I would like to say about Reddit is it only IPO'd, I think, about a year ago, roughly. So it IPO'd, bounced around for a couple months, then had a crazy trending trade. It was just mainstream stock. People were hearing about it more often than other stocks. And it was traded heavily because of that. It has since calmed down, kind of went back to realistic levels. It's around 109. It's been bouncing around between 110 and 125. So being that the chart is telling me it's holding this 3-month average, and now all the hype around Reddit is calmed down, I'm buying it because I love the idea of what Reddit is. I think it's something that people are going to more so use in the future, and I want to be a part of that. So that's why I'm buying Reddit. My next pick is Walmart. So if you look at a 1-year chart of Walmart, it's like the greatest chart that you would see. It's just impossible to break. It's just been killing it. It did a 1-day bounce on its 6-month average and then rallied from that level. So that tells me the stock is not giving up. It's not finding weakness when it's presented. And it's strong. There's strong buyer sentiment around it. And then, as I've mentioned for the past few months, inflation has been cooling over the past 3 months. So with that said, Walmart would be a beneficiary of that. Lower inflation means lower prices on things, means more consumer activity in their stores. So I am a huge buyer of Walmart. They also pay a great dividend. So again, you're earning income just for ownership of those shares. That's what dividend means. Every 3 months, they pay you some money just for being an owner of the company. And it creates a silent background income that you could do whatever you wish with, just creating more income, creating more money for yourself. And then my last pick this week is actually United HealthCare. So going off of what I was saying earlier in the episode, the news surrounding it is absolutely terrible, but the news is already priced in. So just to use the example like the tariff news, we're aware of it already. It's already in. We already know what's going on. So in this case, the probe is already being conducted. The second CEO who stepped up after Brian Thompson, the one who was assassinated, he has also stepped down now as the probe began. So he could be one of those key officers who is up to no good. I don't know the guy, not making a judgment. But what I'm saying is the news is already in. We're already aware that these problems are surrounding United HealthCare. Stock already fell and is already showing a breath of life in Thursday and Friday's trading. So their dividend percentage is 2.88, absolute killer dividend. The average is 1.25, so you're getting more than double the average for ownership of the shares, just that income being generated in the background. So those are all my picks. I would also say, even with a rising market, buying the TQQQ and the UPRO ETFs are still solid moves. If you don't know what to buy, you feel stocks are maybe just running away from you, running too fast, buy those ETFs. The UPRO focuses on the S&P 500 and the TQQQ focuses on the NASDAQ, but both of them are identical in trading at a 2 times double weight. So meaning if the S&P 500 rallies 5% this week, like it did this past week, you'll see 10% on those ETFs. So again, just a blanket that covers the entire market. You're invested in the stock market. And no matter what market atmosphere we are in, you cannot go wrong with that. You are investing in the market, and in turn, you are investing in yourself. Just an honorable mention, the Mega 7 is still mostly discounted greater than the S&P 500. So where the market is just about 4% off its all-time highs, you have Apple way further than that. You have Amazon touch further than that. You have Microsoft is killing it, so that's not a good example. But some of them are still discounted. Tesla is still way off its all-time highs. So honorable mention, some of the Mega 7, the TQQQ, the UPRO. Can't go wrong with those. And with that, I just want to say thank you again for tuning in. I am always here to be a resource for anybody looking to learn more about the stock market and looking to just learn more about making money overall. Our future is dependent on ourselves, so now is a good time to start investing in yourself. Follow me on Facebook, follow me on Instagram, follow me on YouTube, follow me on Spotify, and follow me on Threads. Thank you, and I'll talk to you next week.